Hey everyone, and welcome to this explainer. Today, we are peeling back the curtain on some deeply ingrained financial conventions. We're going to explore the wealth accumulation strategies of the financial elite, specifically looking at them through the lens of Robert Kiyosaki's framework. Now, whether you totally agree with his philosophy or not, it's a completely fascinating look at how different groups treat the very concept of money. So let's map out exactly how the system functions, shall we? Okay, let's dive into this. Right out of the gate, we have to confront a seriously counterintuitive question. Is saving money actually keeping you from building wealth? I mean, for most of us, saving is the ultimate golden rule, right? But in this framework, this practically universal belief might literally be the exact thing holding everyday people back.
Section 1, The Great Wealth Paradox, a look at two very different financial paths.
And this brilliantly illustrates that fundamental divide. On one side, notice the path of everyone else. Here, the focus is heavily placed on locking up cash and saving it. But contrast that with the path of the financial elite. Their focus abruptly shifts away from hoarding cash and goes directly toward acquiring assets and buying. It's this striking side-by-side juxtaposition of two totally different mindsets operating simultaneously in the exact same economy. Section 2, the strategy of saving, the mechanics of the traditional path. So, what do we mean when we say saving in this framework? Well, it means relying on accumulating cash reserves as your primary vehicle for financial security. It's the traditional playbook, you know? You trade your time for a paycheck and you hoard a portion of that cash for a rainy day. It's safe, it's steady, and honestly, it's the financial bedrock for the vast majority of us. Now, when we break down this traditional saving strategy, we see a few core characteristics. First off, it relies heavily on cash accumulation, literally stacking currency in a secure bank account. Second, it strictly adheres to conventional financial wisdom, the exact kind you'll hear from most traditional planners. And third, as our source material outlines, it represents the default strategy of everyone else. It's the standard playbook that keeps the traditional economy moving along.
Let's move to Section 3 and see how this builds. Why the rich buy? Shifting the focus from cash to assets. To really understand the elite perspective, we actually have to redefine a crucial word here. Buying does not mean going on a wild shopping spree at the mall. In this context, it is strictly the strategic acquisition of income-producing assets, rather than just purchasing consumer goods or liabilities. It's not about spending money to look wealthy. It's about deploying your capital to acquire things that actively put money back into your pocket.
Now, what's really interesting about this slide is how these two types of purchases contrast. Consumer buying means acquiring liabilities that actively lose value, like a brand new car that depreciates the exact second you drive it off the lot. Elite buying, on the other hand, means acquiring assets that actively produce income, like real estate that generates rent or dividend-paying investments. The physical action of buying is the same, but the financial target, completely different.
Section 4, Elite Wealth Accumulation Strategies. Breaking down the framework.
So, how do they do it? The financial elite approach wealth accumulation with a specific set of operational rules. First, they aim to convert cash into assets as efficiently as possible. To them, cash is just a temporary tool for exchange, not the ultimate prize. Next, they prioritize acquiring over simply saving. Sitting on massive piles of cash is seen as a huge missed opportunity. And finally, they leverage this specific type of buying to build lasting wealth that can actually withstand inflation. It's really a philosophy of constant, calculated motion rather than just static accumulation.
This entire philosophy boils down to one absolutely provocative idea. The rich keep buying while everyone else saves. It really challenges you to look at your own accounts and ask, is my money just sitting there idle, or is it out in the market working on my behalf? The mechanics of this operate as a simple three-step cycle. Step 1, generate income. This is where absolutely everyone starts, but here's the divergence. Step 2, buy assets. Instead of locking that income away in a vault, the elite buy something that holds or increases in value. Step 3, assets generate more income. Those assets now produce their own cash flow, which loops right back to the top of the cycle. It's like a self-sustaining, compounding engine of wealth. So, the crucial point is how the mathematical reality becomes super clear over time. Saved cash has a notoriously slow growth potential. It often struggles just to keep pace with inflation, meaning your purchasing power is quietly eroding away. But income-producing assets, they offer compounding growth. Over a long timeline, the gap between these two strategies just becomes absolutely massive. Section 5. Shifting your financial perspective. Evaluating the dichotomy.
So, what does this all mean? The ultimate takeaway from this framework isn't necessarily a sudden mandate to go and empty your savings account tomorrow. I mean, everyone needs an emergency buffer, right? Rather, it's a profound shift in mindset. It's about viewing money not just as a static resource to hold on to tightly, but as an active, dynamic tool used to acquire wealth-generating assets. It's really about understanding the fundamental difference between hoarding cash and strategically deploying it to build real financial momentum. Which brings us to our final thought today. I want you to ask yourself, what is your current ratio of saving cash versus buying assets? Take a really hard look at where your money flows every single month. Are you operating entirely on the conventional path of everyone else, or are you beginning to consciously build the asset acquiring habits of the financial elite? It's a totally fascinating and vital question to ponder as you chart your own financial future. Thank you so much for joining me on this explainer today. Keep questioning the conventions and keep learning.